Greetings, beef producers, and welcome to this edition of In the Loop, brought to you by Often Insurance Agency, the home of Policy Plus. Today, in this educational update, we're going to be talking about livestock risk protection policies, better known as LRP. And today, in our example, we'll specifically be looking at beef feeder cattle coverage. LRP feeder cattle is designed to insure against declining market prices. You may choose from a variety of coverage levels and insurance periods that match the time your feeder cattle would normally be marketed. Ownership may also be retained. You may buy LRP feeder cattle insurance throughout the year from the Risk Management Agency approved livestock insurance agents like Often Insurance Agency. Premium rates, coverage rates, and actual ending values are posted online daily on the RMA website, and we will visit that site shortly. You may choose coverage prices ranging from 70% to 100% of the expected ending value. At the end of the insurance period, if the actual ending value is below the coverage price, you will be paid an indemnity for the difference between the coverage price and the actual ending value. When you visit RMA's website, you can see LRP feeder cattle program coverage prices, rates, actual ending values, and per hundredweight insurance cost. Actual ending values are based on weighted average prices from the Chicago Mercantile Exchange Group Feeder Cattle Index. Actual ending values are posted on RMA's website at the end of the insurance period. You submit a one-time application for LRP feeder cattle coverage. After the application is accepted, you can buy specific coverage endorsements throughout the year for up to 12,000 head of feeder cattle that are expected to weigh up to 1,000 pounds at the end of the insurance period. The annual limit for LRP feeder cattle is 25,000 head per producer per year, and that runs from July 1st through June 30th. The length of insurance coverage available for each specific endorsement is either 13, 17, 21, 26, 30, 34, 39, 43, 47, or 52 weeks in length. Coverage is available for calves, steers, heifers, predominantly Brahman cattle, dairy cattle, and unborn calves. You may choose from two weight ranges when we're talking about beef feeder cattle: 100 through 599 pounds and 600 through 1,000 pounds. As I mentioned earlier, tons of information can be obtained from the USDA Risk Management Agency website. You can get there by Googling RMA. Once you get to the Risk Management Agency site, in the search bar at the upper right-hand corner, type in LRP and you will be directed to this page. For our example today, we will want to click on the first link that says LRP coverage prices, rates, and actual ending values. Once the site loads and you get there, it'll be a blue screen like this. Again, click LRP coverage prices, rates, and actual ending values to get to the report generation page. It will show the effective date of today's date, March 3rd, 2023, and we'll click Next. Then we would need to select from the drop-down menu the state of North Carolina for this example, and we would click Next once again. Then we would need to select our commodity. Today, as I said, we're going to be talking about feeder cattle. We will click Next. In the example today, for the type, we're going to be talking about steers number 2, weight number 2, which I said would be a 600 pound through 1,000 pound steer. Then we would click Create Report. Once this is generated, you'll see a great big sheet of numbers here. State of North Carolina, all counties. Then you will see this column here where I'm moving my mouse up and down. That is the length of endorsement. In this specific example, there are contracts offered from 13 weeks all the way down to 43 weeks in this example here. Now, as we move across the page, we'll see this is feeder cattle. steer weight number 2, which is 600 through 1,000 pounds. Expected ending values $203.105 per hundredweight. Looking at a coverage level of 99.67%, that would give us a coverage price of $202.43 per 100 weight. This 202.43 would be our guaranteed price at the end of the contract period, which in this example would be the 2nd of June 2023. If the index at the end of close on 6/2/23 is less than our coverage price of 202.43, then an indemnity would be paid to you. Now, as we scroll down and look at the bottom, this will show you a difference in coverage. This one, the projected price is 219.235 per hundredweight, and the coverage level would be $200.16 per hundredweight. Note, this one would end on 29th of December 2023. Now, as we scroll back up to the top here and look across, we've seen our coverage price and our coverage level. Then we look at producer premium per 100 weight. This would be $3.80. That would be times the number of hundredweight you're insuring with the animal. Now, notice as we go down, the further this contract gets out, when we get to 43 weeks, that in premium price goes way down. It is $1.64 per 100 weight. Now let's go to a specific example and dig in a little deeper. In the example here, we're going to assume that the policy was taken out on the 31st day of January 2023, and they anticipated an end date of October 30th, 2023. This contract assumes that all steers and heifers would weigh over 600 pounds. We'll note the start date may not be available on some days because of holidays, and on some days contracts are not offered due to volatility in the market or no sales in the market that day. The end date is the date the contract ends, and they calculate the ending value to see if an indemnity is paid. You can sell animals at any time during the last 60 days of this contract. No, you can sell animals at any time during the last 60 days of this contract, but not before. If you have an end date of 10/30, you can market your animals 60 days prior. Note, report any death loss along the way so that can be reported to the underwriter. It must be reported in less than 72 hours. Even if your animal dies, you still pay premium, but you are eligible for indemnity. Reporting covers the number of 100 weights in case you come up short on your sales papers. If you insured 500 100 weights but only sold 450 100 weights, you could have had 8 to 9 600-pound calves die. Remember, the indemnity is based on the market at the end time. Claims settle within 30 days of a signed indemnity form being turned in to the approved insurance provider. Remember, when you sell your cattle, you must have the following: a sales ticket that has all of these items: the name of the buyer, the name of the seller, the date sold, the number of heads sold, the average weight of livestock sold, and you will need an individual ticket for each grouping. For example, all heifers that fell in heifer weight 1, you would need paperwork containing that information. If you had a group of heifers weight 2, you would need the same information for that group, and so on for steers 1 and steers 2. Note, if you sell your cattle before the end of the period, you can transfer your policy to the new owner, the coverage and potential indemnity, providing the new owner meets eligibility requirements. In the example on the screen here, like I said, we took out a start date of January 31st, 2023, and we had an ending date of 10/30/23. Our coverage price will be $205.20 based upon the ending value of $211.123. And you'll notice that when we buy this 90 97.19% coverage, it gives us a coverage price of $205.20 per hundredweight. And this would cost you $4.28 per 100 pounds, or $25.68 per 600 pound animal, $29.92 per 700 pound animal, or $34.24 per 800 pound animal in this example here for a 13-week policy, 39-week policy. In this next example, we're going to do the same kind of thing for a heifer in weight number 2, which is 600 to 1,000 pounds. This is also going to be a 39-week endorsement length here. The expected end value is 190.011 on the top line here. This is 97% coverage, gives us a guaranteed coverage price of 184.68 per 100 weight. This would cost you $3.85 per 100 pounds, or $23.10 per 600 pound heifer, $26.95 per 700 pound heifer, or $30.80 per 800 pound heifer. Remember, the premium billing date is due on the first day of the month following the end of your insurance period. Now you may ask, how do they come up with the ending value calculation? The CME Feeder Cattle Index is based upon a sample of transactions from these weight and frame score categories: 700 to 899 pound medium and large frame number 1 feeder steers, and 700 to 899 pound medium and large frame number 1 and 2 feeder steers. The sample consists of all feeder cattle auctions, direct trade, video sales, and internet sale transactions within the 12-state region that's colored in on the map here of Colorado, Iowa, Kansas, Missouri, Montana, Nebraska, New Mexico, North Dakota, Oklahoma, South Dakota, Texas, and Wyoming, for which the number of head, weighted average price, and weighted average weight are reported by the Ag Marketing Service of the USDA. When you see the picture on the right, this shows a CME Feeder Cattle Index calculation that was calculated on March 31st, 2022. The box in red at the bottom would be the reported index price of 156.05, and this is the price that would be used if someone had purchased a contract with an ending date of March 31st, 2022. Now you may ask, how do I get started? Well, the first thing we would do, you would need to fill out an LRP application plus an SBI power of attorney or assignment of indemnity forms as needed. Then on the day you'd want to pull the trigger and make the policy active, you would fill out a specific coverage endorsement to your LRP application. Then if you happen to sell the animals before the end of the period, you would need to fill out a transfer right of indemnity form as we mentioned earlier. Now, when we look at how the LRC policy cycle works, the first thing we would do, we would fill out the application and paperwork as we mentioned before. Then as your agent, I would give you a quote based on your ending date when you're planning on selling your animals and the animal group classifications, which we talked about earlier, steer 1 or 2 or heifer 1 or 2, depending on the weight of the class. Then on the date you would decide to enact the policy, we would need to fill out a specific coverage endorsement on that date that would be complete with the number of hundredweights you would be insuring and which animal class they were. Then the premium would be calculated and billed, and again that premium would be due on the first date of the month after the end of the contract. Then loss determination, RMA would calculate actual ending values, and in this example, our approved insurance provider is RCIS. They would identify any potential indemnities. An LRP claim form would then be mailed to you from RCIS. You would review it, sign it, and return it to pay the indemnity, which would be paid within 30 days after receipt of this signed indemnity form. Thank you for joining us us today for this edition of In the Loop as we did an educational update on livestock risk protection, or LRP, for beef feeder cattle. We went over a lot of numbers and a lot of specifics, but don't worry, we're here to help you. Give us a call. We'll come to you so you can focus on family and farming. Let us worry about the details of this. We'll educate you and guide you all the way through this process so we can help protect your risk at your farm or ranch. Thank you for tuning in. Let us know if we can be of help. Talk to you next time.